Mayuresh, what about you? You agree that Ultratech, for now at least, is a stock that an investor can remain invested in?
Afternoon, Sumer. Afternoon, Mangalam. Yes, I think the story is that cement stocks and infra-related stocks might show a huge turnaround in the second half. Because what you probably saw in Q2 numbers were phenomenal. I think the kind of volume growth that one expected, better than what was probably envisaged. The second element, obviously, is that the input costs have remained stable. So to that extent, I think the reported EBITDA per ton has improved significantly as well. As monsoons are over and as execution shall improve going forward, expectations of realization growth also happening, demand coming back strongly, creating a strong operating leverage on balance sheets. And with the kind of presence, as an example, that Ultratech has across the country at this point of time, and the subsidiary is also starting to do well with utilization levels inching up and higher. I think, yes, I think the cyclical story for cement will probably stay over the next few quarters. So yeah, it's a hold from our side. We've suggested this to our clients.
All right, so on Ultratech, for now, a hold from both our experts. The next query comes in on NBCC. Mr. KRC Murthy is on the line with us. Go ahead, Mr. Murthy.
Hi, Sumaira. Thank you very much for picking up my query. I hold around 5,000 shares of NBCC, and I actually started picking up at the levels of 60, and I've averaged it out currently at 32. I've got 5,000 shares. I just wanted to know, should I hold, pick up some more, or what do I do?
Okay. Mayuresh, for a retail investor, what does holding a stock like NBCC mean? I mean, are there better opportunities out there? Should he just exit right now and shift that money elsewhere?
That can be a possibility, Sumaira. I think I'll give you 2-3 reasons why. I think for the company as a whole, the revenue has been declining because of weaker execution. Now, they've got two segments. The PMC segment has got a lot of issues related to project delays, what has happened in terms of cost overruns, and that has clearly affected the overall margins for the company. The second element obviously remains that how are they going to execute all the projects at hand? So I think the order book is extremely strong. I think no two ways about it. 72,000 crores, more orders expected in their kitty. But what probably happens is how execution will take place and how the EBITDA margins might improve. But they are not expected to improve quite significantly. So even in the quarter gone by, it was just a 0.9% margin that they probably reported. So therefore, I think the dividend yield might be good. I think the order book might be good, but execution still remains to be very, very sticky for this stock. So it might be a long, and a painful journey for earnings recovery as per our own methodology and what the Canstrim ratings are probably suggesting. We probably like, as I said, more cyclical related stocks as the vaccine news is coming around and the expectation of economic revival. So cement stocks, infra-related stocks, rural themes, a little bit of a flair added from banking and financial names or financial services as well. I think, yes, I think those options might actually work out in this favor.
All right, that's the view coming in on NBCC, but a similar query coming in on a similar space. We have Ankit Shah calling us from Mumbai. Ankit, I believe you have investments in Engineers India?
Yes.
Tell us a little more about that.
So I have around 16,000 shares. I had till yesterday. Today I sold some shares.
All right.
So I know about the share, this buyback at 84.
Mm-hmm.
So I've been collecting from 70 rupees. My average is 65 rupees.
Okay.
Now. So the only issue is it went to 61, but I was out of cash, out of money at that time, so I couldn't average it more.
All right. So you're buying this in the cash markets, right?
Yes. Equity delivery, yes.
All right. Mayuresh, your views on EIL. He is sitting on a fair amount of money, and this is from the infra space, perhaps a better play, a lot of fundamental analysts believe, because of the strong income that they get from consultancy. So higher cash generation, etc. And with the buyback, do you think that's a sweetener he should hold on, or maybe sell some that he has sold some already, sell some more perhaps?
No, so Mangalam, you're right. I think better placed in the infra-stroke execution space as well. So I think the consultancy is close to around 51% turnkey is around 49%. The EBITDA margins probably get a little bit subdued because turnkey as a business has lower margins compared to the consultancy. However, I think because it's a steady mix and because they've got a strong order book as well, I think the order book is close to around 8,900 odd crores. That gives them the visibility and the expectations that if they can execute well and the kind of pipeline they're probably looking at from OMC players, MRPL, the Paradeep refinery coming up for them as well. I think that can probably have an added cushion as far as the order book is concerned. Second, I think the banks, the EIL's balance sheet probably is very, very strong. So I think 2,500 odd crores on the balance sheet obviously substantiates into better dividend yields as well. But cash flows also are expected to improve as the economy opens up. So yeah, to a certain extent, as per our EPS ratings, as per our RSI ratings and the overall master score that we have at O'Neill, this looks a better place stock at this point of time. So yeah, I think if he's got the patience with a medium to long term view, he can probably hold on to this story.
Welcome back. Auto stocks are doing well, so why wouldn't battery stocks do well? 7% gains on Amara Raja and the other player Exide as well. That stock higher by almost 6%, and that's telling you the sort of moves that we're seeing in the mid-cap end of things itself. Talking about mid-caps, we have another query coming in. A viewer calls us from Kochi, Mr. Matthew. He has a couple of investments. Mr. Matthew, good afternoon.
Yeah, hi, good afternoon. I have purchased Care Ratings at IPO, and then I added some more, and my average price is about 850-900 rupees. So
Care Ratings.
1,000 shares, and Care Ratings. I want to know two questions. One, who is the promoter of Care Ratings?
Okay.
Because if you go to the Money Control website, promoter holding is 0.
Right.
So is there a promoter, and will Standard & Poor or CRISIL, will they, what has happened to their stake in Care Ratings?
All right. I believe you also have holdings in Polycab. Yeah. Tell us a little about Polycab.
Yeah, again bought at IPO and then added more. So my average price is about 1,000.
All right. So, just as far as the promoter of Care Ratings is concerned, it's not necessary that a lot of companies do have promoters. Case in point, something like an L&T or even ITC, they're held by institutions. And as far as S&P's holding is concerned in Care, they're bound by regulation to not increase their holding beyond a certain percentage point. So, which is why maybe, that is as far as your fundamental question on Care is concerned. But as far as the stock and Polycab's, advice is concerned, I'd probably go across to Mayuresh. Mayuresh, your thoughts on Polycab as well as Care. I believe he's making some money in Polycab, not so much in Care.
Yeah, so for Polycab, to start with, Mangalam, I think the first half, specifically quarter one of lockdown, was very, very awful in terms of reported numbers. They've seen some respite coming back in Q2. And therefore, I think the kind of first half numbers, if you correlate with the earlier year, I think there has been a degrowth of 25% on the top line and EBITDA. But I think the margins have still held up at 12%. Now, the wires and cables business, what they're probably doing with that, the expectations of further reach as far as the retail distribution is concerned, and the distribution channel specifically on the domestic side of the business improving, along with strong improvement seen in the FMEG part of the business, fans, consumer durables, those will show signs of improvement. So yeah, I think this is one stock that probably fits our ratings bill. So I think he can very well hold on to the stock. For Care, you're absolutely right, Mangalam. I think in terms of the promoter, I think there is no fixed promoter per se. 13% held by mutual funds, almost 26-27 held by FPIs. There are other individual investors that hold the rest of the pie as well, with the restrictions on S&P. But as far as numbers are concerned, leaving aside the last quarter, the preceding few quarters have been a little bit on the dampening side. But again, I think the last quarter showed some light at the end of the tunnel, showed some signs of improvement. And as more and more paper will start coming through, I think the kind of ratings and the kind of the mandatory requirements that are probably needed will hold out their income going forward as well. So yeah, he can hold on to the stock just because there is no promoter per se which probably has that. I think strong institution holding also helps out.
We've snapped that connection with Rahul, but meanwhile we did get the point that he's saying PSUs have been wealth destroyers in the last few years, and same is the case with Coal India as well. Mayuresh, would you concur, or do you think at his price maybe the downside is limited, attractive dividend yields, maybe from now on things look better?
Yes, so the downside risk, Mangalam, is probably done and dusted with. So I think there is not further downside that is probably expected. Dividend yield 9-10%, phenomenal for Coal India with the kind of cash that it carries on their books. Again, the management con call and the commentary was positive on a few aspects. The import substitution of 100 million tons I think that is a huge opportunity for Coal India. With commercial mines coming up and the expectations that production and supply will start coming through as power demand starts coming back with a roar in the next few quarters, that will probably abet their e-auction revenues as well. So I think the e-auction realizations are extremely critical in terms of the overall pie that they have and the reported EBITDA that they also have that they report per ton. So I think what they reported last year of around 450, 453, that might come down a tad bit. But the expectations of doing around 660 odd million tons this year, that will probably looks a little bit bleak, but they're probably able to do that in the coming year as well. The focus, Mangalam, is clearly shifting towards renewables. So I think how are they going to compete in terms of price growth against renewables at this point of time in the next few years is something to be seen. But yeah, I think the earnings recovery will be slow and steady. But I think second half should be relatively better for Coal India. So yeah, I think you can hold on if he has got a medium-term view. But again, our objective is very clear. I think we'll still love growth stories within the broader market.